Okay, it's been a couple of weeks since I've been able to do an actual video. I ended up having to drive to Washington State, move my daughter, bring all of her things, fill up my trailer. Then we had an inspection. Oh my gosh, it's been like a whirlwind. Like right now is the calm before the real literal storm, because we are going to have a rainfall. My mom said the weather report is Sunday night till Wednesday. So I literally had to drive this out and I filled it up with gas, propane, got air in the tires, dumped all the black water and all that fun stuff. Then moved my daughter in here with me, and now she's at a, like, I don't know, beach area right now. It's kind of dark. Yeah, I told her it's getting ready to get dark, but she needed a break. There was so much going on. It was just crazy making. I mean, seriously, I'm glad I don't have crazy hair to have to deal with right now because everything else went crazy. It's one thing I can control, I guess. Anyways, I wanted to mention that last video I did was Arise Shine. Whoa. That thing took me like 5 days to upload. It was something. Either we didn't have electricity or we didn't have internet. It was blah. There was all these different things. It was terrible. Anyways, there's some really good key points in that video, and I seriously think, oh, hell just broke loose. I mean, it was all hell. I was getting it from every area imaginable. It was just, I can't tell you the bombardment of attack. Seriously, just from releasing that video. Because there were some scriptures in there from the prophet Micah, chapter 6, 1 and 2, and I think it was 10 through 16, but I might have wrote it differently. Anyways, basically what that said was, if we see the evil that's going on in the world and we don't do anything about it, then we're not the remnant. We're not the ones that are set aside out of the world system and in the Father's house. If we do not do anything about the evil that we see in the world, God's going to be very unhappy with us. And we are not even going to be able to call ourselves the remnant, the ones who are set apart from the world. So I have a limited time because I got a couple of other people that might be having to stay here. And this is just due to circumstances for other people losing their place of dwelling. I'm babysitting my neighbor's dog, and people, we do need to understand about this banking stuff and the contracts. We need to understand that. And if we get ourselves in contracts, we better protect ourselves. How with those banking, make sure that we know how to write those banking acceptances and stuff. So look at some of my other videos, the ones that have Elvis in it. He talks about the banker's acceptance. I wanted to see, I mean, there's some things that someone just sent me and I would really like to go over it and I would really like to do it. But in order for me to go through it, I think I'd have to put all my info, and I need to not do that. So let me see if I can share a screen. Let me see what I got. What's up? All right, right now, I want to invite some people, but look at my screen. It's like, blah. It's not allowing me to even give the link to the tribe. I've sent it 3 times, but it's like doing the rotating circle thing. Let me see. I wanted to see if I could find, let me, okay, I was looking for that secret banker's manual, but you know what? I found something else. Let me just look at this and see if I can share the screen. All right. So looks like I had this on my computer for a while, and it's talking about bank foreclosures. So this is comments from the professor. Banks are the main source of financial pain for all of us. You may not understand that statement now, but after reviewing this file, you will be mad as hell because of the abuse you have suffered for many years at the hands of the bank due to their illegal and immoral conduct. The sample action just might level the playing field. Again, this knowledge is a loaded gun. Hey, hey, what? Be careful how you use it. Abuse will make it worthless in the blink of an eye. Shh, I'm babysitting. Okay, how and why the bank must switch currency. Not fulfill the loan agreement. 3, obtain your mortgage note without investing 1 cent. And 4, forcing you to labor to pay interest on the contract. 5, the bank refuses to fulfill the contract. 6, makes you a depositor, not a borrower. So the oldest scheme throughout history is the changing of currency. Remember the money changers in the temple? They changed currency as a business. Oh, you would have to convert to temple currency. Oh, in order to buy an animal for sacrifice. I get that. The temple merchants made money by the exchange. The Bible calls it unjust weights and measures and judges it to be an abomination. Yahusha cleared the temple of these abominations. Our Christian founding fathers did the same. Ben Franklin said in his autobiography, the inability of the colonists to get the power to issue their own money permanently out of the hands of King George III and the international bankers was the prime reason for the Revolutionary War. Hey, quiet. The year 1913 was the third attempt by the European bankers to get their system back in place within the United States of America. President Andrew Jackson ended the second attempt in 1836. Peaches, I'm trying to read. What they could not win militarily in the Revolutionary War, they attempted to accomplish by a banking money scheme which allowed the European banks to own the mortgages on nearly every home, car, farm, ranch, and business at no cost to the bank, requiring we the people to pay interest on the equity we lost and the bank got free. Today, people believe that cash and coins back up all the checks. If you deposit $100 of cash, the bank records the cash as a bank asset, debit, and credits a demand deposit account, DDA, saying that the bank owes you $100. For the $100 liability the bank owes you, you may receive cash or write a check. If you write a $100 check, the $100 liability your bank owes you is transferred to another bank, and that bank owes $100 to the person you wrote the check to. That person can write a $100 check or receive cash. So far, there's no problem. Remember one thing, however, for the check to be valid, there must first be a deposit of money to the bank's assets to make the check liability good. The liability is like a holding account, claiming that money was deposited to make the check good. Here then is how the switch in currency takes place. The bank advertises it loans money. The bank says, sign here. Hey, quiet. However, the bank never signs because they know they are not going to lend you theirs or other depositors' money. Under the law of bankruptcy of a nation, the mortgage note acts like money. The bank makes it look like a loan, but it's not. It is an exchange. Hey, come here. Quiet. I'm trying to read. The bank receives the equity in the home you are buying for free in exchange for an unpaid bank liability that the bank cannot pay without returning the mortgage note. If the bank had fulfilled its end of the contract, the bank could not have received the equity in your home for free. Let me read that again. If the bank had fulfilled its end of the contract, the bank could not have received the equity in your home for free. The bank receives your mortgage note without investing or risking 1 cent. The bank sells the mortgage note, receives cash or an asset that can be converted to cash, and still refuses to loan you their or other depositors' money or pay the liability it owes you. On a $100,000 loan, that's nothing. The bank does not give up $100,000. The bank receives $100,000 in cash or an asset and issues a $100,000 liability check. A check the bank has no intention of paying. Exactly. The $100,000 the bank received in the alleged loan is the equity. Oh, the lien on the property. Oh, yeah, because they make your house or your car the collateral, right? Yep. The bank received without investment, and what happened? What happened? And it is the 100,000 the individual lost in equity to the bank. Oh. The $100,000 equity the individual lost to the bank, which demands he or she repay plus interest. The loan agreement the bank told you to sign said loan. The bank broke that agreement. Oh, that's so true right there. Because they didn't give us a loan. It's just a book entry. It's just an asset debit thing. Okay, wait, what happened just then? Wait. So the bank then deposited the mortgage note in an account they opened under your name without your authorization or knowledge. Boom, right there. The bank withdrew the money without your authorization or knowledge using a forged signature. For real? Really? The bank then claimed the money was the bank's property, which is a fraudulent conversion. Wow. The mortgage note was deposited or debited asset and credited to a direct deposit account, DDA, liability. The credit to a direct deposit account, liability, was used from which to issue the check. The bank just switched the currency. Whoa. The bank demands that you cannot use the same currency, which the bank deposited, promissory notes or mortgage notes, to discharge your mortgage note. The bank refuses to loan you other depositors' money or pay the liability it owes you for having deposited your mortgage note. To pay this liability, the bank must return the mortgage note to you. However, instead of the bank paying the liability it owes you, the bank demands you use these unpaid bank liabilities created in the alleged loan process as the new currency. Now you must labor to earn the bank currency unpaid liabilities created in alleged loan process to pay back the bank. What the bank received for free, the individual lost in equity. If you tried to repay the bank in like-kind currency, which the bank deposited without your authorization to create the check they issued you, then the bank claims the promissory note is not money. Huh. They want payment to be in legal tender. Checkbook money. The mortgage note is the money the bank uses to buy your property in the foreclosure. They get your real property at no cost. If they accept your promissory note to discharge the mortgage note, the bank can use the promissory note to buy your home if you sell it. Their problem is the promissory note stops the interest and there is no lien on the property. If you sell the home before the bank can find out and use the promissory note to buy the home, the bank lost. The bank claims they have not bought the home at no cost. Question is, what right does the bank have to receive the mortgage note at no cost in direct violation of the contract they wrote and refuse to sign or fulfill? By demanding that the bank fulfill the contract and not change the currency, the bank must deposit your second promissory note to create checkbook money to end the fraud, putting everyone back in the same position they were prior to the fraud in the first place. Then all the homes, farms, ranches, cars, and businesses in this country would be redeemed and the equity returned to the rightful owners, the people. If not, every time the homes are refinanced, the banks get the equity for free. You and I must labor 10 to 15 years full time as the bankers sit behind their desks laughing at us because we're too stupid to figure it out or to force them to fulfill their contract. The $100,000 created inflation, and this increases the equity value of the homes. On an average, homes are refinanced every 7.5 years. When the home is refinanced, the bank again receives the equity for free. Oh. What the bank receives for free, the alleged borrower loses to the bank. According to the Federal Reserve Bank's own book of Richmond, Virginia, titled Your Money, page 7, demand deposit accounts are not legal tender. If a promissory note is legal tender, the bank must accept it to discharge the mortgage note. The bank changed the currency from the money deposited, mortgage note, to checkbook money, liability the bank owes for the mortgage. Hey, quiet. Note deposited. Hey, shh. Let me see if I'm on the right page. Forcing us to labor to pay interest on the equity in real property, real estate, the bank received for free. This cost was not disclosed in notice to customer required by federal law, Federal Reserve Regulation Z. Oh, guess we'll have to mention that. When a bank says they gave you credit, they mean they credited your transaction account, leaving you with the presumption that they deposited other depositors' money in the account. The fact is they deposited your money, mortgage note. The bank cannot claim they own the mortgage note until they loan you their money. If bank deposits your money, they are to credit a demand deposit account under your name. So you can write checks and spend your money. In this case, they claim your money is their money. Ask a criminal attorney what happens in a fraudulent conversion of your funds to the bank's use and benefit without your signature or authorization. What the banks could not win voluntarily, through deception they receive for free. Several presidents, John Adams, Thomas Jefferson, and Abraham Lincoln, believed that banker capitalism was more dangerous to our liberties than standing armies. U.S. President James A. Garfield said, "Whoever controls the money in any country is absolute master of industry and commerce." The Chicago Federal Reserve Bank's book, Modern Money Mechanics, explains exactly how the banks expand and contract the checkbook money supply, forcing people into foreclosure. Hey, quiet. This could never happen if contracts were not violated and if we received equal protection under the law of contract. Peaches, come here. Come over here. Come here. You want me to hold you a little bit? Because you're not letting me. You're not letting me. Okay, this is Peaches. Look at Peaches. Is she cute? She's so cute. She's the cutie. But she sounds like a rooster sometimes. Barking and barking. All right. You stink. All right, so This could never happen if contracts were not violated and if we receive equal protection under the law of contract. How the bank switches the currency. Pay attention to this. This is a repeat worded differently to be sure you understand it. You must understand the currency switch. The bank does not loan money. The bank merely switches the currency. I guess my guest is here, so I'm going to have to probably quit. Hang on a second. Okay. All right, let me see if I can get back to that. All right, so here, this is the important part. So the bank does not loan money. The bank merely switches the currency. The alleged borrower created money or currency by simply signing the mortgage note. The bank does not sign the mortgage note because they know they will not loan you their money. The mortgage note acts like money. To make it look like the bank loaned you money, the bank deposits your mortgage note lien on property as money from which to issue a check. No money was loaned to legally fulfill the contract for the bank to own the mortgage note. By doing this, the bank received the lien on the property without risking or using 1 cent. The people lost the equity in their homes and farms to the bank, and now they must labor to pay interest on the property, which the bank got for free and they lost. The check is not money. The check merely transfers money, and by transferring money, the check acts like money. The money deposited is the mortgage note. If the bank never fulfills the contract to loan money, then the bank does not own the mortgage note. The deposited mortgage note is still your money, and the checking account they set up in your name, which they credited, from which to issue the check, is still your money. They only return your money in the form of a check. Why do you have to fulfill your end of the agreement if the bank refuses to fulfill their end of the agreement? If the bank does not loan you their money, they have not fulfilled the agreement. The contract is void. You created currency by simply signing the mortgage note. That's true. The mortgage note has value because of the lien on the property and because of the fact that you are to repay the loan, the alleged loan. The bank deposits the mortgage note, which is currency, to create a check. Currency. Oh, I was looking for the BM. What does that mean? Bank money. Oh, bank money. That's right there. Both currencies cost nothing to create. By law, the bank cannot create currency, bank money, a check, without first depositing currency, mortgage note, or legal tender. For the check to be valid, there must be a mortgage note or bank money as legal tender. But the bank accepted currency, mortgage note, as a deposit without telling you and without your authorization. The bank withdrew your money, which they deposited without telling you, and withdrew it without your signature in a fraudulent conversion scheme, which can land the bankers in jail, but is played out in every city and town in this nation on a daily basis. Excuse me. Without loaning you money, the bank deposits your money, mortgage note, withdraws it and claims it is the bank's money, and that it is their money they loaned you. It is not a loan, it is merely an exchange of one currency for another. They'll owe you the money which they claimed they were to loan you. If they do not loan the money and merely exchange one currency for another, the bank receives the lien on your property for free. What they get for free, you lost and must labor to pay back at interest. If the banks loaned you legal tender, they could not receive the liens on nearly every home, car, farm, and business for free. The people would still own the value of their homes. The bank must sell your currency, mortgage note, for legal tender. So if you use the bank's currency, bank money, and want to convert currency, bank money, to legal tender, they will be able to make it appear that the currency, bank money, is backed by legal tender. The bank's currency, bank money, has no value without your currency, mortgage note. The bank cannot sell your currency, mortgage note, without fulfilling the contract by loaning you their money. They never loaned money. They merely exchanged one currency for another. The bank received your currency for free without making any loan or fulfilling the contract, changing the cost and the risk of the contract where they refuse to sign, knowing that it is a change of currency and not a loan. If you use currency, mortgage note, the same currency the bank deposited to create currency, bank money, to pay the loan, the bank rejects it and says you must use currency, bank money, or legal tender. The bank received your currency, mortgage note, and the bank's currency, bank money, for free without using legal tender and without loaning money, thereby refusing to fulfill the contract. Now the bank switches the currency without loaning money and demands to receive your labor to pay what was not loaned, or the bank will use your currency, mortgage note, to buy your home in foreclosure. Oh. The Revolutionary War was fought to stop these bank schemes. The bank has a written policy to expand and contract the currency, bank money, creating recessions, forcing people out of work, allowing the banks to obtain your property for free. If the banks loaned legal tender, this would never happen and the home would cost much less. If you allow someone to obtain liens for free and create a new currency, which is not legal tender, and you must use legal tender to repay. Oh, what happened? What happened? Okay, this changes the cost and the risk. Under this bank scheme, even if everyone in the nation owned their homes and farms debt-free, the banks would soon receive the liens on the property in the loan process. The liens the banks receive for free are what the people lost in property and now must labor to pay interest on. The interest would not be paid if the banks fulfilled the contract they wrote. If there is equal protection under the law and contract, you could get the mortgage note back without further labor. Why should the bank get your mortgage note and your labor for free when they refuse to fulfill the contract they wrote and told you to sign? Sorry for the redundancy, but it's important for you to know by heart their shell game. I will continue in that redundancy as it is imperative that you understand the principle. The following material and case law on the subject and other related legal issues, as well as a summary. Logic as evidence. The check was written without deducting funds from SA or CD, allowing the mortgage note to become the new pool of money owed to DDA, SA, CD, oh boy, direct deposit accounts, SA, CD, increasing by the amount of the mortgage note. In this case, the bankers sell the mortgage note for Federal Reserve notes or floating reserve notes or other assets while still owing the liability for the mortgage notes sold and without the bank giving up any Federal Reserve notes. If the bank had to part with Federal Reserve notes, which they don't, and without the benefit of checks to hide the fraudulent conversion of the mortgage note from which it issues the check, the bank fraud would be exposed. Federal Reserve notes are the only money called legal tender. If only Federal Reserve notes are deposited for the credit to the direct deposit account, SA, CD, and if the bank wrote a check for the mortgage note, the check then transfers Federal Reserve notes and the bank gives the borrower a bank asset. There's no increase in the checkbook money supply that exists in the loan process. The bank policy is to increase bank liabilities. DDA, which is the direct deposit account, SKCD by the mortgage note. If the mortgage note is money, then the bank never gave up a bank asset. The bank simply used fraudulent conversion of ownership of the mortgage note. The bank cannot own the mortgage note until the bank fulfills the contract. The check is not the money. The money is the deposit that makes the check good. In this case, the mortgage note is the money from which the check is issued. Who owns the mortgage note when the mortgage note is deposited? The borrower owns the mortgage note because the bank never paid money for the mortgage note and never loaned money, bank asset. The bank simply claimed the bank owned the mortgage note without paying for it and deposited the mortgage note from which the check was issued. This is fraudulent conversion. The bank risked nothing, not even when penny was invested. They never took money out of any account in order to own the mortgage note, as proven by the bookkeeping entries, financial ratios, balance sheet, and course of bank's literature. The bank simply never complied with the contract. I am going to Shift Command 4. I'm going to save this logic as evidence because this is good. I'm going to send this to my bank. Dang. All right. Got to go back now because I skipped. So, if the mortgage note is not money, then the check is check kiting, and the bank is insolvent, and the bank still never paid. If the mortgage note is money, the bank took our money without showing the deposit and without paying for it, which is fraudulent conversion. Boom, there it is. The bank claimed it owned the mortgage note without paying for it, then sold the mortgage note, sold it, took the cash, and never used the cash to pay the liability it owed for the check the bank issued. The liability means that the bank still owes the money. The bank must return the mortgage note without fulfilling the contract by loaning you their money. They never loan money. They merely exchange one currency for another. Oh, the bank received your currency for free. That's what I'm saying. Check is not money. Wait a minute. Oh, what is it? What? Oh, is this the end? Oh, but merely in order to pay money. It's an order to pay money. If the mortgage note is money, then the bank must pay the check. What happened? By returning the mortgage note. The only way the bank can pay Federal Reserve notes for the check issued is to sell the mortgage note for Federal Reserve notes. Federal Reserve notes are not redeemable in violation of the UCC. Really? The bank forces us to trade in non-redeemable private banknotes, of which the bank refuses to pay the liability owed. When we present the Federal Reserve notes for payment, the bank just gives us back another Federal Reserve note, which the bank paid 2.5 cents for per bill, regardless of denomination. What a profit for the bank. Whoa. The check issued can only be redeemed in Federal Reserve notes, which the bank obtained by selling the mortgage note that they paid nothing for. I am going to Shift Command 4. I'm going to do this because I have to send that to Wells Fargo. I hope I'm saving this because I'm just saying. I don't know if I saved the other one. Let me go back. I'm going to have to go back one because this one was good. Shift Command 4, that's how you do this Mac thing to be able to get a screenshot. And then we're going to save that because I'm going to have to send that to Wells Fargo to their executive offices. Okay. So the Revolutionary War was fought to stop these bank schemes. Wait, I already read that part. Let me go back. All right. Oh, here we go. So it says the check issued can only be redeemed in Federal Reserve notes, which the bank obtained by selling the mortgage note that they paid nothing for. The bank forces us to trade in bank liabilities, which they never redeem in an asset. We, the people, are forced to give up our assets to the bank for free and without cost to the bank. This is fraudulent conversion, making the contract, which the bank created with their policy of bookkeeping entries. Hey, that's what I'm talking about. Illegal and the alleged contract null and void. Right there, boom. Fraud vitiates everything. The bank has no right to the mortgage note or to a lien on the property. And that's the same thing with the cars. When you go to the car dealerships and they want to put your car as collateral, when they already received the money from the Federal Reserve window from your application, that's like a mortgage note. That's why you want to ask for it back. And I did recently, and I got my application back. I was kind of expecting to get the car, but now they can't make a claim. But maybe I can. 1099 OID? I don't know. I don't know if I could do that one. Maybe I could do 1099A. All right, anyway, so the bank has no right to the mortgage note or to a lien on the property until the bank performs, that's the word, under the contract. Just saying. The bank had less than 10%. It's true, of Federal Reserve notes to back up the bank liabilities in the direct deposit account, savings account, or CDs. A bank liability to pay money is not money. When we try and repay the bank in like land funds, such as the bank's policy to deposit from which to issue checks, they claim it's not money. The bank's confusing and deceptive trade practices and their alleged contracts are unconscionable. So this is a summary of damages. The bank made the alleged borrower a depositor by depositing $100,000 negotiable instrument, which probably was the application, right? Which the bank sold, yeah, or had available to sell for approximately $100,000 in legal tender. The bank did not credit the borrower's transaction account, showing that the bank owed the borrower, me, the $100,000. Rather, the bank claimed that the alleged borrower, me, owed the bank $100,000, then placed a lien on the borrower's real property, the house or the car, for $100,000 and demanded loan payments, or the bank would foreclose or repossess your car. The bank deposited a non-legal tender negotiable instrument and exchanged it for another non-legal tender check, which traded like money using the deposited negotiable instrument as the money deposited. Do you guys get this? Do you get what's happening? It's like, let me give you some Indian puka shells for those beaver hats. They're just, like the dinar or the yen. They're just exchanging currency papers. Like, let me give you this IOU for some toilet paper. The bank changed the currency without the borrower's authorization. First, by depositing non-legal tender from which to issue a check, which is non-legal tender, and using the negotiable instrument, your mortgage note, to exchange for legal tender. The bank needed to make the check appear to be backed by legal tender. No loan ever took place, which shell hides the little P. You know that little game that they play with the three shells? Find the quarter or whatever underneath of there. That's what they're doing. So the transaction that took place was merely a change of currency without authorization. A negotiable instrument for a check. The negotiable instrument is the money, which can be exchanged for legal tender to make the check good. An exchange is not a loan. The bank exchanged $100,000 for $100,000. There was no need to go to the bank for any money. The customer, alleged borrower, did not receive a loan. The alleged borrower lost $100,000 in value to the bank, which the bank kept and recorded as a bank asset and never loaned any of the bank's money. In this example, the damages are $100,000 plus interest payments, which the bank demanded by mail. The bank illegally placed a lien on the property and then threatened to foreclose, further damaging the alleged borrower if the payments were not made. All right, this is what I'm going to do. Shift, Command, and 4. We're going to save this piece, and I'm going to send that to Wells Fargo. Because that's a good one, too. Now I got to save that. And I got to somehow go back. So a depositor is owed money for the deposit, and the alleged borrower is owed money for the loan the bank never made, and yet placed a lien on the real property demanding payment. Damages exist in that the bank refuses to loan their money. The bank denies the alleged borrower equal protection under the law and contract by merely exchanging one currency for another and refusing repayment in the same type of currency deposited. The bank refused to fulfill the contract by not loaning the money, and by the bank refusing to be repaid in the same currency, which they deposited as an exchange for another currency. A debt tender offered and refuses a debt paid to the extent of the offer. The bank has no authorization to alter the alleged contract and to refuse to perform by not loaning money. It's the same thing with the credit cards, you guys. When we apply for a credit card, we're acting like they're giving us money. Those credits, the credit card, they're not really giving us money, but they're making money on our interest when we pay them back. They just like forwarded us credits. They didn't really give us any money. They just, oh, we're going to let you. That's how they're doing it. So by changing the currency and then refusing repayment in what the bank has written policy to deposit, the seller of the home received a check. The money deposited for the check issued came from the borrower, not the bank. The bank has no right to the mortgage note until the bank performs by loaning the money. In the transaction, the bank was to loan legal tender to the borrower in order for the bank to secure a lien. The bank never made a loan, but kept the mortgage note the alleged borrower signed. This allowed the bank to obtain the equity in the property by a lien and transfer the wealth of the property to the bank without the bank's investment, loan, or risk of money. Then the bank receives the alleged borrower's labor to pay principal and usury interest. All right, this is a good one too. To grab this one. This is good. This is really good, man. I'm just saying. Okay. So what the people owned, or should have owned debt-free, the bank obtained ownership in and for free in exchange for the people receiving a debt, paying interest to the bank, all because the bank refused to loan money and merely exchanged one currency for another. This places the you in perpetual slavery to the bank because the bank refuses to perform under the contract. The lien forces payment by threat of foreclosure. The mail is used to extort payment on a contract the bank never fulfilled. Boom. That right there is Title 18 violation right there. Using the United States Postal Service to extort payment. If the bank refuses to perform, which they do, then they must return the mortgage note. If the bank wishes to perform, then they must make the loan. That's right. Show me the money. The past payments must be returned. Oh, because the bank had no right to lien the property and extort interest payments. Right there, baby. The bank has no right to sell a mortgage note for two reasons. The mortgage note was deposited and the money withdrawn without authorization by using a forged signature. And two, the contract was never fulfilled. The bank acted without authorization and is involved in fraud, thereby damaging the alleged borrower. That would be me. So here's some excerpts from Modern Money Mechanics, pages 3 and 6. What makes money valuable? In the United States, neither paper currency nor deposits have value as commodities. Intrinsically, a dollar bill is just a piece of paper. Deposits merely book entries. Coins do have some intrinsic value as metal, but generally far less than face value. Then, bankers discovered that they could make loans merely by giving their promises to pay or banknotes to, what happened? To borrowers. In this way, banks began to create money. More notes could be issued than the gold and coin on hand because only a portion of the notes outstanding would be presented for payment at one time. Enough metallic money had to be kept on hand, of course, to redeem whatever volume of notes was presented for payment. Transaction deposits are the modem counterpart of banknotes. It was a small step from printing notes to making book entries, creating deposits of borrowers. When the borrowers, in turn, could spend by writing checks, thereby printing their own money. Notes exchange just like checks. How do open market purchases add to bank reserves and deposits? Suppose the Federal Reserve System, through its trading desk at the Federal Reserve Bank of New York, buys 10,000 of Treasury bills from a dealer in U.S. government securities. In today's world of computer financial transactions, the Federal Reserve Bank pays for the securities with an electronic check drawn on itself. Whoa. Via its Fedwire transfer network, the Federal Reserve notifies the dealer's designated bank, Bank A, that payment for the securities should be deposited in the dealer's account at Bank A. At the same time, Bank A's reserve account at the Federal Reserve is credited for the amount of the securities purchased. The Federal Reserve System has added 10,000 of securities to its assets, which it has paid for in effect by creating a liability on itself in the form of bank reserve balances. These reserves on Bank A's books are matched by $10,000 of the dealer's deposits that did not exist before. If business is active, the banks with excess reserves probably will have opportunities to loan the $9,000. Of course, they do not really pay out loans from money they receive as deposits. If they did this, no additional money would be created. What they do when they make a loan is to accept promissory notes in exchange for credits. That's what it is. To tile borrowers' transaction accounts. Loans, assets, deposits, liabilities, both rise by 9,000. Reserves are unchanged by the loan transactions, but the deposit credits constitute new additions to the total deposits of the banking system. Proof: banks deposit notes and issue bank checks. The checks are only as good as the promissory note. Nearly all bank checks are created from private notes. Federal Reserve notes are a private corporate note, HJR 192. We use notes to discharge notes. Excerpt from booklet, Your Money, page 7. Other M1 money. While demand deposit, traveler's checks, and interest-bearing accounts with unlimited checking authority are not legal tender, they are usually acceptable. Wait, I want to shift Command 4 and I want to get this right here. Boom. Right here, boom. I'm going to have to send this to the executive offices. Okay, in payment for purchases of goods and services. The booklet Your Money is distributed free of charge. Additional copies may be obtained by writing to Federal Reserve Bank of Richmond, Public Services Department, P.O. Box 27622, Richmond, Virginia 23261. This is all the case laws right in through here. Credit loans and void contracts. Oh. Farmers and Miners Bank versus Bluefield National Bank. Boy, there's a lot. Lewis versus United States. Whip versus Iverson. The debtor's RICO action against its creditor, alleging that the creditor had collected an unlawful debt, an interest rate where all loan charges were added together, that exceeded in the language of the RICO statute twice the enforceable rate. The court found no reason to impose a requirement that the plaintiff show that the defendant had been convicted of collecting an unlawful debt running a loan sharking operation. The debt included the fact that the exaction of a usurious interest rate rendered the debt unlawful, and that is necessary to support the civil RICO action. Durante Brothers and Sons Incorporated versus Flushing National Bank. All this is RICO stuff. Well, I'm getting tired, all that reading. But this has all these Young versus Hembry, Bankers Trust versus Nagler, Christensen versus Beebe, Kirkland versus Bailey, United States versus Neifert White Company. You can take a snapshot of this if it would stay still. The contract is void if it is only part connected with the illegal transaction of the promise, single or entire. You know what I'm going to do? I'm going to grab it. Shift Command 4. Look at all of this. Oh my gosh. Dang. Okay, so it is not necessary for rescission of a contract that the party making the misrepresentation should have known that it was false, but recovery is allowed even though misrepresentation is innocently made, because it would be unjust to allow one who made false representations, even innocently, to retain the fruits of bargain induced by such representations. Whip versus Iverson. Whew. Definitions to know when examining a bank contract. Bank account. A sum of money placed with a bank or banker on deposit by a customer and subject to be drawn out on the latter's check. Bank, whose business it is to receive money on deposit, cash checks or drafts, discount commercial paper, make loans, and issue promissory notes payable to bearer, known as bank notes. Bank credit, a credit with a bank by which on proper credit rating or proper security given to the bank, a person receives liberty to draw to a certain extent agreed upon. Bank deposit, cash, checks, or drafts placed within the bank for credit to depositor's account. Placement of money in bank, thereby creating contract between bank and depositors. Demand deposit, the right to withdraw deposit at any time. So you can take a snapshot of all this. Hey, let's look at this. Consideration. The inducement to a contract. The cause, motive, price, or impelling influences which induces a contracting party to enter into a contract. The reason or a material cause of a contract. See illegal consideration and impossible consideration. Questions one might ask the bank in an interrogatory. Did the bank loan gold or silver to the alleged borrower? No. Did the bank loan credit to the alleged borrower? Did the borrower sign any agreement with the bank which prevents the borrower from repaying the bank in credit? Is it true that your bank creates checkbook money when the bank grants loans simply by adding deposit dollars to accounts on the bank's books? Oh, this is good. You know what I'm going to do with this? Move my picture on the side. I'm going to grab the whole shebang. Shift Command 4. You guys can make copies of this whole thing. Just grab all this. and send it to your bank. You know what I'm saying? Let's look at all that stuff. Oh my gosh, these are good questions. And there's more. Okay, I'm gonna grab that. Shift Command 4. Oh my gosh, there's so many. Look at all that. 35 questions. Wow. I'm gonna grab it all. Give me the fastest cut and paste email I send. Let's see what happens. I'm just saying. I'm just saying. How are they gonna be able to rebut this stuff? They're not. I'm gonna have to sue them. So, by the banks not fulfilling the contract by loaning legal tender, they make the alleged borrower a depositor. This is a fraudulent conversion of the mortgage note. A fraud is a felony. The bank never invested any money to receive your mortgage note. If the bank deposits your mortgage note, then the bank must credit your checking account, claiming the bank owes you $100,000 for the $100,000 mortgage note deposited. Wow. Oh, and here is some type of a judgment and decree. Jerome Daly. You guys can take a snapshot of this. I can't read the whole thing. I'm getting tired. It's good stuff here, though. Plaintiff demand for a jury trial. Cause of action, facts. Woo. Affidavit. Yeah, baby. Oh, a prayer. May the God of creation intervene in the hearts of men, that truth may prevail over deception, that law may prevail over lawlessness. May God move the heart of the presiding judge of this court too. Grant injunctive relief, set aside the judgment in the original action of foreclosure stopping the sale of his homestead property, and declaratory judgment instructing the plaintiff of his rights under the law, or instructing the plaintiff that his rights, which are in question, are contrary to his understanding. Impanel a jury to determine the facts of this case. And of this he puts himself upon the country. Respectfully submitted. Your name in upper and lower case. So you can take snapshots of this. This is by Don Quixote. And it's been something I've had on my computer for a long time. And oh man, how many? There's 81 pages of this. I can't read all this. Like, it's a lot. Yeah. I'm just going to go through all the pages and then you can just take snapshots. Dang. Charter Power is the name bank of a state chartered bank. Oh. 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 These are good. These are good questions. Certified checks negotiable debt. Whoa. I would imagine that you could, you know, copy, paste, freeze that, and send it even to the credit card companies. Those are banks too. Holder in due course. Hey. Look at how many. Do you see how many? Whoa, Masonic Oath. Oh my gosh. Oh. Oh my gosh, that's awesome. 195 to 197. Are you a member of a free and accepted Masons or any other Masonic order? Have you taken any Masonic oaths as a member of Masonic order? Are you a member in good standing? Oh my gosh, that's because that's private, secret society stuff. All right, I'm getting sleepy. Page 76 of 81. Yeah. Huh. Well, you guys can, Professor of Law Don Quixote J.D. Well, I'm really tired now, but that was pretty good. I got some good snapshots of that. I don't even know how to get out of this now. Let me stop share. I'm so sleepy now. I'm tired. But those snapshots that I grabbed, you can easily send that to your executive bank people on an email. And I think I'm going to do that because I've already addressed them like 7 or 10 times. And they keep saying, oh no, it was a legitimate loan. No, it wasn't. You liars. Well, anyways, I'm sleepy. I'm getting tired. I don't know what's flying in the air right now. But you guys have a good evening, and I hope that this will help you in confronting the banks.